much. I'm joined now by Bradley Ziff. He's a senior risk advisor at Misys, and he joins us to discuss the changes of risks and shifts in the markets. That's a big introduction to give to you. Maybe just remind us, what is the key focus of Misys?
Misys is a global software firm, several thousand or more clients, nearly $1 billion firm, and been in business for over 30 years, focusing on a whole variety of risk products, including business, banking, obviously software for risk management, trade finance, loans, almost across the board what banks and investors
one
need.
Area which is screaming risk right now is all of these geopolitical tensions that we're seeing. We're seeing their effect on the markets. Maybe let's take a step back from the market outplay. Maybe just talk about these geopolitical tensions, maybe starting off with Russia and Ukraine, and what this means at a global level.
Well, I think, Nozipo, that the issues which are probably most important to understand is over the last month and a half, as we have seen escalated tensions in Gaza, as well as in Russia and Ukraine, and obviously, most unfortunately, in the last 4 to 5 days, the shooting down of the Malaysia Flight 17, that the markets have not seemingly reacted heavily to that. You have seen isolated spikes, obviously related to Russia itself, their commodity prices, mining, issues with regard to the implementation that the U.S. has put on and what that's going to mean to some of the larger Russian companies like Gazprom. But by and large, the markets themselves, the exchanges, as well as the equity markets, the bourses, they've all stayed they've almost basically factored that in.
What accounts for this insulation? You would think that, incidences of this magnitude would have some sort of ripple effect on the global markets.
Well, I think if you go back, for example, to start in the Middle East now has been a unfortunate hotspot for terror as well as for disruptions between the Middle East and the Israelis for a large number of years. It would be impossible for the Middle East financial functions, be it in Dubai or in the KSA, Saudi Arabia, to function effectively if they had to react to everything that was happening, for example, in Syria. The same thing is true, I think, with Russia and Ukraine. There has been a sense that these are fairly localized problems as opposed to thinking that they will spread or have a systemic effect on broader markets.
Now, understanding that, Bradley, your expertise really lies in the financial space, and perhaps let's get into that particular space right now. What are the big concerns around risk pertaining to the financial sector, not only for South Africa, but maybe let's take a continental look?
Sure. I think the biggest concern right now in the financial sector tend to be driven more by macro issues and then secondly by regulatory topics. So on the macro side, you have had multiple trillions of dollars of stimulus that has been imposed on the market through a variety of mechanisms. The U.S. investments themselves, that's now resulting in tapering, and the questions surrounding whether the U.S. will or will not raise interest rates, it has really now shifted to the timing of that and what will the effect of that be on the market. I think second, you're looking at Europe that is still several months, if not a couple of years behind, depending upon the locations, as to whether or not they have caught up with the crisis. You still have banks there. We've had the incident in Portugal where there are banks that are still on the brink, and there's still, I think, a concern as to whether or not the European countries are yet recovered from that process. And I think third, when you think about what is happening, is we have had an enormous regulatory impact on the banks. So there's been a number of, I think, really bright economists who have begun to comment on the fact that the regulatory effect on the banks is now making them unsustainably profitable. So it is going to be a question going forward 3, 4, 5 years out when you combine the fines, the compliance, and the capital issues that have been brought down by Basel as to what banks and their profitability will look like.
That's a big analysis, and maybe let's just also talk about if we have this foresight or this predictive ability that you put on the table now. What should governments, in particular from a policy perspective, how should they be thinking about the regulations that pertain to the financial sector?
I think the main driver, quite frankly, about central banks has been driven at the very top, meaning from the Bank for International Settlements and from the major regulatory entities, the PRA in the UK and the Fed and the Treasury in the US. And we have found for the most part, especially in developing and emerging markets, that they have basically copied what the global regulators have asked for. So the global regulators might contain between 20 or 30 countries, but it's really spread well beyond that. As I have visited places including Indonesia, Malaysia, Brazil, Saudi Arabia, time that I have spent in the Middle East, you'll find that there's not much different than the time I've spent here in South Africa and the time in Kenya and forthcoming time in Nigeria and Ghana. When you look at those countries, they are finding that replicating those same type of fairly harsh, in many ways, capital restrictions will keep the banks safe and keep the customers of the banks safe. That's what really the debate is about.
Let's pull these strings together, and particularly let's talk about the New Development Bank, or as it's more commonly known, the BRICS Bank, which South Africa is part of, and yet we're seeing continued tension in with Russia and the Ukraine. Does this in any way threaten the viability of this bank?
I think, to be honest with you, the success of the BRICS Bank is going to be very heavily dependent on China. China is the multiple, 100-pound gorilla in this room. They are a member of this, whether or not they continue to have the sustained growth that they've had at 7.5% and can continue that, whether they are in a position that they don't suffer any difficulties in the property market, which is, I think, one of the big concerns they have. But when you look at all the major countries that are participants in the BRICS Bank, the key is going to be, number one, how China continues to fare, and second, do they end up competing against other entities like the IMF, the IADB, the World Bank, or do they have more relaxed requirements for people to get loans and investments? That will be the key as to whether the BRICS banks can achieve success.
And finally, I understand that you will be putting forward a new paper, or the company will be putting together a new paper. So I know it's work in progress, but what the sense of the key thrusts that are coming from that paper? What are the key findings?
Well, our key findings are basically that the banks, I think, are heavily threatened by profitability. The question is, what do they do with their risks? And over the past 3 to 4 years, you have seen a significant shift in risks coming from the sell side to the buy side. So effectively, the buy side is anything from an asset manager, a pension fund, a private equity firm, obviously hedge funds, hybrid instruments. They're now taking on a number of those risks. They're lending out to corporates. They're investing in infrastructure. They're becoming heavily engaged in some of the same roles the banks have had. So as you look forward 7 to 10 years, and I think beginning almost immediately, risks are shifting. Market, credit, liquidity, and a lot of those risks are shifting to unregulated entities from the regulated side, and the banks achieving profitability globally will be heavily tested.
Bradley, thank you so much. That was Bradley Ziff, Senior Risk Advisor at Misys.